Hi guys, today I'm gonna give you 10 steps I would do if I wanted to learn trading from scratch. Here are the corresponding timestamps. If you want to skip to them, feel free to do so. Alright, step number 1. Start with adequate capital. I don't see this step being told a lot, but I believe that being properly capitalized helps you remove the rush of trying to make profits by over-risking or over-leveraging. So first, how do we get capital? My recommendation is to save more money, increase your cash flow, and get a stable job that will fund your trading career. Because it's easier to trade if you have a job to support you instead of solely relying on trading as your source of profits. Now, after you do this, then you can look at the minimum amount to open an account and then decide on a realistic amount of capital you want to start with. Remember, when you're starting out, your goal is to learn. And in the learning process, you're most likely gonna lose money. So as always, only put in money you can afford to lose. However, in this day and age, we already have what we call prop firms in the forex industry. So examples of these are my forex funds and FTMO. So what are prop firms? Prop firms allow you to trade their capital when you pass their challenge. So essentially, you have to pay a small fee, pass their challenge, and then you can get to trade larger capital. So one example in MFF is you pay $49. Then if you pass phase 1 and phase 2, you get access to a $5,000 trading account. From there, you can see by investing only $49, you're able to trade a large capital and you don't need to over risk because risking 1 to 2% per trade is already enough. So the reason why I tell you to start with adequate capital is so that you don't go into trading with that flipping mindset of turning a small account into a very big account by over risking or by luck. We want you to develop a consistent way of taking money from the market. Next step, increase your knowledge because knowledge is power. So this step is very crucial. You have to have a very rock solid foundation of understanding the financial markets and how it works. So here, you're going to start with the basics. So for example, reading the chart, how to read the candlesticks, and then you can learn more about leverage, volatility, risk management, technical analysis, trading psychology. Now, all of these topics, I can say much more about them, and we will discuss them in future videos in depth. But those topics are a great start to build your core trading knowledge. So be sure to consume quality content, read a lot of books, articles, watch quality YouTube videos, because the more that you learn, the more that you can trade better. So again, knowledge is power. Third step, but this is very optional, is to find a mentor. Now you might be asking whether you should go the self-study route or to find a mentor. What I can say is having a mentor drastically reduces your learning curve of trading. It takes a long time to learn how to be a consistent profitable trader, and having a mentor decreases that time significantly. However, if you don't have money to invest in a mentor, or if you're gonna invest all of your capital in finding a mentor, I suggest to not do so. There are a lot of free contents out there that's also very quality and that will benefit you a lot. However, should you decide to go towards finding a mentor route, well, the benefits of this is you get access to a mentor which you can ask questions about anything that you may not understand or is confused about. Also, having a mentor will allow you to learn his setups, which I assume is already working and designed to make money from the market. So you don't have to make your own setup and then reinvent the wheel. However, when you're finding a mentor, make sure that you are finding a mentor that has a good track record. There are many fake mentors out there, so please be careful who you look up to. I really wish I found a mentor sooner so it could have drastically reduced the amount of time spent learning. However, in this time and age, sobrang daming free and quality resources in YouTube and TikTok. So be sure to capitalize on them. Next, Find a working strategy. Mapa-indicator man yan, price action, smart money concepts, Elliott waves, harmonic, news-based trading, quant-based trading. Just find one that speaks to you and resonates with you and stick with it. And over time, continuously refine it and improve your strategy. Personally, what I use is a mix of supply and demand trading with a bit of ICT concepts. And then I also trade momentum when the market is favorable. When I trade momentum, I use indicators. Now, after finding a strategy, what you have to do is to backtest and front test. So ano nga ba ang backtesting? Backtesting involves looking at historical price data and checking how your setup would have performed. By backtesting, this allows you to check whether your strategy or setup performed well in past data. This allows you to assess whether or not to continue trading with this strategy. Also, you will find out the strengths and weaknesses of the strategy. Overall, backtesting will give you the confidence you need to execute on your trades. Why? Because you already have data that backs it, that it says it's gonna work across a long period of time. So don't skip out on backtesting because this is very tiring and tedious, but this is very important. Okay, halfway there. Step number 6, join a community. Joining a community helps you connect with like-minded traders, and you don't have to be a lone wolf trader because there's almost always no benefit being alone. Connecting with others allows you to learn more about the different perspective of the market, exchange trade ideas, and find someone that can give you solid advice. If you want a free and quality community, I encourage you to join my free Facebook group. It's called Kreios Capital. In there, me and my students share a lot of trader sections, which I assume is gonna be very, very valuable, especially when you're learning how to trade price action. Being a community is one of the best stages in your journey because you actually connect with people. Hindi kailangan maging lonely ang trading. Alright, next up, you are almost ready to put in real money and start trading. But first of all, you have to start virtual trading or paper trading or demo trading, whatever you want to call it. One of the popular ways to trade demo is using TradingView. Pero actually, nowadays, marami ding mga brokers that offer opening a demo account which you can practice on with real life market scenarios. Trading this way allows you to not risk money on your setups, so you can test your setups without actually losing money. However, keep in mind that the emotional state of trading is not learned in demo and you might have a hard time transitioning to trading live. However, what I want you to do is first be consistent trading demo before you try live trading. This will allow us to remove most of the headaches when starting out with a live account. Okay, step number 8. Journal. Journal and journal. Use a journal to keep track of your trades. This allows you to gauge your performance and the performance of your trade setups and check where you are winning and where you are losing. In your journal, you can also see the similarities between your winning setups and your losing setups. So what you want to do is you want to bet more on your winning setups and then ditch the losing setups, or do the opposite of the losing setups to transform it into a winning setup. Your journaling is quite an art, and I'm gonna make a future video about it on how I specifically journal. And journaling, there's two types. There's manual and there's automatic. Manual, you can go for Excel, Google Sheets, Notion, and whatever you have. You can even use your own Discord server to keep track of your trades. Personally, I prefer manual because I get to put in more notes about my motion, about my trade management, and all that stuff. But if you want automatic because you're lazy, that's also fine. What's important is you reflect on the trades you're taking and identify whether you are taking good trades or bad trades. Step number 9. Don't focus on the P&L or profit. Keep your eyes on the process. Understand that profits is just a byproduct of your process and effort. Sabi nga nila, your P&L is a lagging indicator of your process. So, as long as you put in the work day in and day out and continuously refine your process, good profits will arise in due time. Sabi nga ng famous trader, your job is to take good trades. It doesn't matter when you win, from taking bad trades because that's mostly out of luck. What you want to do is when you win, taking the good trades. Okay, if you're still here, the last step is keep showing up. Consistency is key. Trading is a long journey. So you have to stay committed at each step of the way, no matter what challenges you face, what setbacks, and whatever you may encounter that will discourage you from pursuing trading as a craft. Remember that success in trading takes time and perseverance. So, are you ready to embark in your trading journey? If so, I will gladly root for you and see you in the consistent profitable side. I hope you're ready. I hope you learned a lot from my tips and steps. And I wish you good luck in your trading journey. Kreios out.